Hey everyone, how are you all? Welcome to the session. Today is February 23, 2023, and this is a live session. We call it Tiger Live since this is organized by Tiger Brokers. We're going to be live. We're going to be looking at market opportunities live and get prepared because just in a few hours, the US markets will open and the market analysis we're going to do today will be useful as the market opens and trading is available. Before we get started, I want to say my name is Jose Blasco. You have my email on the screen. You have our social media handles, Trade with UFOs, as well as Tiger Brokers SG. And on the upper left side of the screen, as we are starting, I am highlighting our financial disclaimer, which is fairly short. So I would like to suggest and request everyone to read it carefully because it is important information. And I am indeed counting on you to do that since this session is not a financial advice session, it's a session for coaching, is a session for educational purposes, for demonstration purposes, and all of the above. And for sure, I'm here to help you, meaning that I am watching the chat boxes on YouTube, I am watching the chat boxes on the Tiger Brokers app, and I would welcome your comments, your questions, your interaction, and certainly I'm counting on you to do that. And one way to warm up and get started with the feedback and interaction, questions and answers and so on. It would be nice of you guys if you were to type hello on the chat box, so it's a nice thing to do. Plus now I get confirmation that sound is good, chat box is ready, etc. With all this said, we're gonna begin our session. As you can see on the bottom part of the screen, we're going to do a couple of things. First, we're going to do a special market analysis report for Tiger traders. This is our SMARTT approach to understand the market. So we are prepared when the market opens, no matter what you trade. But then more specifically, we're going to look at specific opportunities, which I will plan, I will define, I will use some sticky notes on the screen to identify entries and exits and risk management and risk per trade and all of those things. So that way you could evaluate those trades. Hopefully you can learn from me. And then when the markets are open, if you want to practice those trades and you want to use paper money, you can do that. If you want to use real money, of course, that's your decision too. Large size, small size, paper, real, all of those are your decisions. But I will be working with you guys on training, if you wish, on showing you how I do it. And again, feel free to ask questions, okay? Again, looking forward to see those hellos on the chat boxes. That would be very kind of you and very appreciated. So, session, I'll have a quick introduction about myself, speed of the light. Talking about introductions, I will introduce something new, which is a new tiered commission plan for options trading. So listen carefully, especially if you are an active options trader. This is indeed something very relevant. So listen carefully. And then we'll jump into the trade opportunities, and then we'll do our market analysis. And I have a bonus for you, by the way, which I haven't said before. A little gift for you guys, a little trading gift that will be very useful for sure. And again, Q&A, again, instead of keeping it to the end, we can certainly do it as we go. I think it would be much more efficient that way. So let's do it. Let's talk about first the new tiered commission plan. Okay, so Tiger Broker is now launching for options traders, especially if you are a mid to high frequency trader. So you would be very interested in taking a look at the new tiered commission plan, by which instead of having a fixed cost per contract, so basically your cost goes down the more active you are, which is pretty visual and pretty clear when you look at the screenshot, when you look at the table on the screen. I guess it's self-explanatory. Okay, now for that, there are a few instructions that I need to talk about on how you can change your commission plan to the tiered plan, if that's your intention. And by the way, you need to make sure that the version of the Tiger Broker app that you are utilizing is 8.11 or above. Okay, so if you use an old version of Tiger Broker, you will not have the option I am about to show you. So make sure you update the app if that was needed. Okay, so tier commission plan. Again, I guess, an image is worth 1,000 words. I guess the table clearly represents what it is. The more you trade, if you trade 1 to 50 contracts, you're being charged 80 cents per contract. If you trade 500 to 2,000 contracts, so then you are charged 55 cents instead of 80 cents. So the more you trade, the cheaper your commissions, which is nice. If you are not trading too frequently, then probably the fixed commission plan is more adequate. Again, everyone is different here, but take a look at both choices and just do the math for yourself, and you will know what's best for you. With the fixed commission plan, the cost is 0.65 per option, even though there is a platform fee as well, etc. So you can do the math and see what is most convenient. But again, that tier commission model, it's pretty cool. So how can you enable the new tiered plan if you wanted to use that one? Well, you just need to use the Tiger Broker app, and then you would go to portfolio on the app. Once you selected portfolio, you would tap on the button more. And the moment you come to, the moment you tap on more, you come to this particular screen where you have here the option new pricing plan, right? So when you click on new pricing plan, it's going to bring you here. And you can either select the one sorry, not that one. You can either select the tier commission plan or the fixed commission plan. And the beauty is also on the top, it tells you what plan you currently have. And, you can change that once per month. So you can basically change it from here and also have under control what is it that you have. The moment you select it, you would have a confirmation window with an apply now button. And if you accept, that's it. You're all set with a new plan that you have chosen. Okay, so again, pretty simple, pretty clear, very powerful, pretty nice, especially if you're an active trader. So hopefully this is all clear. Feel free to ask questions if you have any. And again, really would appreciate a few more of the hellos on the chat box. Do not be shy. I am here to help. And it would be nice to get a bit of engagement from you guys. So my name, Jose Blasco. You may have been in some of the sessions I've done before. If not, what you need to know about me is that I am a multi-asset trader. I love trading. Options is my little favorite because I always say options give you options. So I love it. You can be directional, non-directional, and many more things. So I really, really like it. And apart from me being a trader, I also happen to own a company called Tradictive, as you can see on the bottom left of the screen. And you can find us on the tradewithufos.com website, where many things that we do, it's all about what we call the UFOs. And you may be wondering, what are those UFOs? Trade with UFOs. Well, those UFOs are those flying saucers, okay? It could be red, could be green, that represent on-field orders to buy or sell on the charts. Okay, on-field orders, UFO, that's what it means. And again, you can use that for timing purposes to basically set your entries, set your exits, and many more things. So again, later I'm going to be live trading. I'm going to be doing live trading, so I will do some demonstrations on how this is done, and I believe it will be pretty clear. So before we get started with the live trading, we need to also talk about what's going on out there. So I would like to mention a few of the headlines. And again, if this is the first time that you attend a session with me, I would just like to say that I am a very pragmatic person. We can talk about news in many different ways. Some people actually make a living out of being a news reporter, and therefore they have a lot to say. But I am just a trader. Okay, so my approach to news is it going to impact the market or not, and how? Is it critical? Is it relevant? Or is it just blah, blah, blah? If it's blah, 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 I will just not talk about it. I'm sorry to be very direct, but I guess the market is direct, so let me be direct to you as well. And I will not be talking about blah, blah, blah. I will just be talking about what is relevant. So Russia and Ukraine is something that is happening for a few months now. It's behind the scenes. I would even say that some people almost already forgot that's happening, because to be honest, there are many other wars in the world as well that may not be mentioned, which is quite unfair. But anyway, so Russia-Ukraine, it's becoming a bit more relevant in the recent times. Okay, yesterday, the president of Russia had, this speech, again, talking about nuclear power and all those things. The U.S. president has been visiting Ukraine, with no official notice to the public before. So again, it's hot again, it's getting heated. And obviously, this is something that at the moment, I would say it has not a major impact in the market, but it could at any moment in time. So we should keep an eye on the Russia-Ukraine conflict. because it's happening and it may get hot again. And US-China tensions, to be honest, this is, to be honest, it's I never really understood why all of this is happening. It's pretty clear. It's two big powers in the world, and again, putting on the side opinions and preferences and so on. Those are two very large companies where, in my mind, China, it's much more the present and the future. US is not, but in the present, the US markets are way larger than China, way more flexible when it comes to regulation. So in the end, as traders, both countries are extremely relevant. It doesn't matter, who is who and what is what. What matters is that they are both very relevant. Well, what's happening recently is also, you got these balloons in the US that have been shut down. And again, all of this is, again, warming up tensions, and all of these things, could generate impacts in the marketplace at any time. So again, I have nothing specific to say about that. Just the only advice here is make sure you are in tune, you keep listening to the news, and if something heated is happening in these particular countries, just be ready to look at your charts, because opportunities may arise, as well as if you have long-term portfolios and you are very passive about it, well, maybe then it's not time to be passive and you need to do some management, okay? Because we don't want to be hopeful if the market was going to crash, okay? US fighting inflation, this is nothing new, but again, it's happening all the time. Earlier this week, we had the FOMC meeting in the US. So again, more talks about it. Today we will be having the GDP being reported in the US, and all of those are figures and news that are indeed relevant, and depending on what the result of the news are going to be. So then you may get some peak of implied volatility during the day trading session, or maybe actually it just sets the beginning of a new uptrend or a new downtrend, depending on the timeframes that you use when you trade. And again, those headlines are relevant. So those are really the news that at this moment in time are out there, and those are the ones to track. But when I say track, I don't mean to have an opinion about it and trade based on your opinion, because the market does not care about our opinion, isn't it? So what we need to do is to then go ahead, and when something happens, it's source of volatility equals opportunity, and then we do our analysis of the charts, like I will do later, and then that's when we find the trades. So we love that things happen. We don't want boring markets. We don't want a boring world where nothing happens, because for traders, that's not good. Okay. And these are the headlines that are the most impactful, for us. Okay. So new breed, I see that you talk about how to change the tier. I'll just rewind a little bit. This is how you do it. If you want to take a screenshot of your screen, please do it now. So I continue with the session for today. But basically, you use the Tiger Brokers app, you go to Portfolio, then you click More, you click Pricing Plan, and you get to this page. This is where you change it, okay? So you can take a screenshot, new breed, and this would hopefully help you to be able to do it easily. Okay, so 589 earnings reports for today. Of course, I'm not going to talk about all of them. I'm just going to talk about the ones I picked as relevant, which those would be Alibaba, Autodesk, and Beyond Meat. So those are companies, stocks that are fairly volatile, very relevant company indeed, and they are reporting earnings today. So if you are invested in those companies, for sure, you need to keep an eye on that. And if you're not, but you're interested, often earnings reports are good sources for market opportunities, because you may have a large gap in one direction, which may give you a good either shorting opportunity or a good buying opportunity, depending on the trade setup. But those earnings reports often come with gaps and fast movements, which basically imply an unsustainable condition in one direction, inviting to take a trade in the opposite direction. Okay, so keep an eye on that based on your trading plan. Now, having said all of this, we're gonna now look at trade opportunities, which I'm gonna do. And as we look at, I want to look at two market opportunities, one to go long, one to go short. So that way I can give a little bit of choices for everyone, one for a larger account, one for a smaller account. So that way everybody can practice. And again, it doesn't matter if it's real money, paper money, which again, by the way, that's your decision. But by looking at opportunities the way I set it up, hopefully I'm giving you practice material for everyone. So even if it's a paper money account, no matter if it's large or small, whatever, so you can always, understand better how option spreads will work because today I'm going to talk about option spreads, okay? Now, before I jump into the real-time charts, okay, I said I have a little trading gift for you. I have a bonus for you, bonus resource. This is what we call our auto climate tool, which is a tool I'm going to use now as I plan trades. Basically, this is a tool that, based on statistics, tells you, should you be a buyer or should you be a seller? Okay, and then, of course, once you know if it's time to be a buyer or once you know if it's time to be a seller, the next question is, okay, which price do I buy at? Which price do I sell at? But before you set entries and exits, even before that, you should define, am I planning to go long or am I planning to go short, right? And AutoClimate does a very good job at answering that question based on statistics. And again, you can get your own AutoClimate for TradingView, which, by the way, TradingView can be connected to Tiger Brokers. So you get your market data from Tiger Broker and your execution through Tiger Brokers utilizing TradingView. And for you to get it, you just go to the URL on the screen, take a screenshot of the QR code, you click on it, you go for the checkout, and when it's time to do the checkout, you don't pay. You just type the code CLAIM8, which will make it free for life. Okay, so that's the code you want to type, CLAIM8. Okay, cool. So later, we're gonna go back to the special market analysis report for Tiger traders. But as I said, we're going to do that later. Now it's time for me to move into real-time charts like I'm doing now and begin with the analysis of the first trade I want to discuss. And I want to plan and I want to document. And again, this is now coaching and training. And my friends, I'm expecting questions from you. Do not be shy. This is now where I'm hoping I'm going to bring a lot of value for you guys. So what do we have here? Okay, well, we have a multiple things. So you can see UFOs, right? You can see the auto climate. So you can see many things. Okay, but right now, let me remove things from the screen. I'm going to remove the UFOs. I want to focus on that little triangle, okay, on this little triangle, which is an Elliott wave turning point. And notice that today, on the daily time frame of Amazon, which is obviously a very relevant company that probably many of you read. So today, as we speak, there is a potential Elliott wave turning point happening on the chart. So now, how did I identify that? Well, notice how on the upper part of my screen, I am using a tool called the Predictive Options Planner. You will find that on our website. Is what we call our top platform, okay? Predictive Options Planner. That is our top platform. And a Predictive Options Planner means that it plans trades for you automatically. Okay, I mean, options are complex as an asset, but while they are complex as an asset, they are not that complex, first of all. And second, with tools like Top, the trades are going to be planned for you automatically. So the first thing I did here is to identify automatically an Elliott wave turning point. And that means that a wave is supposed to propagate in that direction. That wave is likely going to reach the blue box, but of course, there is nothing guaranteed in the markets. If something was to happen, and instead of propagating to the upside, the wave was to continue to the downside and reach the dotted line, so that would mean that this Elliott wave has failed. We can see that a few candles before, we had a case like that. So a few candles before, we had a yellow wave, okay, potential yellow wave that was going to go all the way there, okay? But notice how, if I fast forward, it came to target 1, but it never got to target 2. It never got to target 2, and to be honest, it never went to target 2, but the wave was not broken either. If I go one candle backwards, so notice how the yellow dotted line is right there. Difficult to see because it's yellow, but it's right there. And even though the market went down by a little bit, it never reached the dotted line. So it means that we are still in the process of going to the yellow box, even though now the system has identified a different duration Elliott wave, which is providing a blue box a little bit further, actually. The fact that the market went down a bit, it's obviously bad, but at the same time, it's good because it now generates a wave of a potential longer duration. And in that sense, we have a little bit more money to make using this blue box, which is a little further. So there is an opportunity to go long Amazon I'm going to do that with options, of course, but also notice now I just turn on auto UFOs, which shows me where are the unfilled orders in the market. And notice that if I point at this yellow box, I am concerned we may not get there because we got unfilled orders here, meaning that, the Elliott wave turning point may imply the market go up, 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 up. But when the market gets to this red box, unfilled orders kick in, and then the market goes down, and we may miss the blue box by a few cents. So instead of being greedy, what I am going to do is I'm going to focus on this particular UFO as my target. So in other words, I am planning on a trade today with a target being 108.88. Okay, now I need to give you a bit more indications than that. I'm coming back to this in just a moment. Why else am I interested in this trade? Well, take a look. If I enter in my understanding of what's happening to this market, so this market, let me look at this in a longer trend. So this market, okay, Amazon, since some time ago has changed from being in a downtrend long term to being in an uptrend. Okay, so in a longer time frame, this market is in an uptrend. If you look at the weekly time frame, the monthly time frame, Amazon is changing from down to up. Even though in the daily time frame it's looking like it's falling. Actually, it's in a longer uptrend, so this may go actually past the blue box, even though when it gets to the blue box, probably we're going to have a severe retracement. So it would be wise to take profits here, as I said. What else? Well, the other thing that is very attractive to me is that when you look at the group for that stock, okay, instead of looking at Amazon, I'm looking at retail broadline, and notice how the whole retail industry started moving higher. And also the sector, when you look at the sector, which is consumer services, that sector also started going higher since a little before February. So in other words, we are dealing here with a stock, which is not only giving us an opportunity to buy based on Elliott wave, but on top of that, the whole industry and the group is backing that stock, meaning that if that stock doesn't show decision to go higher, many other stocks that belong to the same sector will probably start moving higher, dragging Amazon with them to the upside. So that, based on my trading plan and my trading preferences, it's a market opportunity that I would accept. Of course, we are all different, and maybe you wouldn't. But again, this session is not about financial advice. This session is about coaching you, and therefore I am giving you all the rationale, which, if you happen to agree, that's, even a more joyful moment. But my point is that what I'm doing here, you can apply it to other techniques as well, and you can certainly do it your own way too. Okay, so we have Amazon giving us an Elliott wave turning point. We have the sector industry and its favor, and we have, plenty of space to go higher because the stock is currently trading at 95 plus, and we are setting a target to be 108.88. Okay, so now let's plan on an options trade based on that. So the way I'm going to do it, I'm just going to use the planner, the top. So I'm going to right click on the red UFO, and I'm going to send it to the strategy builder with a target at 108.90, and that's going to build the options trades for me automatically. So all of those are options trades that are built for me automatically. And now I need to say, okay, so what's the risk I want to use here? So let's say you tell me, look, I would like to risk up to $200. Let's say that's your risk. So you click update, and in this case, we are given 4 choices. So of course, the least the amount of risk you want to use on the trade, the least the choices, the more the risk, the more the choices. Okay, but so let's say your account allows you to risk up to $200, or maybe your account allows you to risk more, but your mindset, want to take it easy. Maybe you're learning and you want to use small risk, so maybe you go for 200. And if you do that and you sort based on return on investment, so the best trade to take is to do the bull call spread made of buying the 105 call and selling the 115 call using the expiration date April 21, 2023. That, if right, is going to create 174% return on investment, and if wrong, the most we can lose is 200. Okay, to be precise, 165 is the most we can lose. Okay, so that is the plan of the trade. We are risking 165 in order to make 288. That's the type of trade that we found that we have in front of us. Okay, now I want to document this a little better. Okay, this is a debit trade with Amazon. Okay, something I didn't check is earnings. Okay, so with earnings, Amazon has earnings that are going to happen on April 27. So if I look at April 27, 2023, we got plenty of time, right? So we're using expiration of April 2021. So pretty nice. So we got time to get to the target before earnings kick in. So in other words, we don't have to worry too much about earnings. And the plan was to sell, not like that, sell the 115 call and buy the 105 call. That's the plan, okay? Now, exit nothing. Well, exit yes. If it gets greater than, we said 108.88, that's the target. So we are going to be exiting the trade for a profit. And we know that the most we can lose is $200 per spread. Okay, so this is the trade plan. You have all the information in the screen. I'm guessing that maybe you want to take a screenshot, so you can certainly do that. I'll wait a moment in case you want to take a screenshot, and then we're gonna move to the next one. Very nice. And please feel free to give me feedback. You guys have been very quiet so far. So if you have no questions, it's fine. But still, I would appreciate if you tell me, Jose, it's all understood. Doesn't matter if you do plan to take the trade or not, or you do appreciate the trade or not. Maybe you have a different trading style and you disagree with me, which is okay. But still, I would like to make sure you understood what I have explained and the plan and the rationale behind it. Again, from a coaching point of view, I would appreciate if you could confirm that to me. So anyway, so next trade that I want to plan is a trade with HLF, which is Herbalife. So this is an opportunity to short. Okay, so if we look at Herbalife, and I'm going to do the same thing I did before. So I'm going to remove auto UFOs. So notice here that we have an Elliott wave turning point here, pointing at the downside with an orange box below, meaning that we expect that stock to go down all the way to the orange box. Now, when looking at that stock, if we look at the group, okay, so we are dealing with a group that just rotated down. So this group, which is personal and household products, it's a group that was trading kind of flat and now has just showed strength to the downside. Another way to say that is weakness, right? And that stock is now kind of like ready to move down together with this group. So now if I re-enable our patented technology auto UFOs, so notice how there are buy on-field orders lining up with the Elliott wave end portion of the wave. So in other words, while Elliott wave theory suggests that these may go down and somewhere inside the orange box it will change direction, that's great. It's a great reference, but we also know that when we come here at 1537, we got on-field orders to buy, and therefore this turning point may happen on the top part of the orange box instead of the bottom part of the orange box. So I don't want to be too hopeful, and therefore I'm just going to set the top of this box as my target and send this to target 15.40, which is a nice move because the stock is currently trading at 19. So it's like almost a $4 drop on a $19 stock. And when we do that, we end up with multiple choices. And again, I'm going to do the same thing. I'm going to be like, okay, so what if I want to risk 200 only? Okay, well, if that's the case, and I sort, so we can see here as a bear call spread is the best choice. Okay, the best choice is a bear call spread. And let me document this. Bear call spread is a credit spread. Risk 200. Okay, a credit spread gets me to bring a different box here. See, best choice is on top. Here we go. And let's take a look at earnings. So earnings on Herbalife are happening on May 2nd. Okay, so May 2nd. Okay, so we have May 2nd, 2023 for Herbalife. Okay, and we're going to be using expiration April 21st, 2023. And this is a bear call spread that will be done by using calls, where the upper strike is going to be to buy the 20 call, and the bottom strike is going to be done by selling the 17.5 call. And activation rules would be that when that stock gets to the target, which is greater than equal, I need to check. Give me a moment. Greater than equal, we said 1537, right? The green UFO lining up with the orange box, that's 1537. So 1537. Okay, if we get to 1537 or lower, you want to close the trade. And this is a trade where currently, based on what we can see here, we're expecting to make $180 of profit. Let me simulate the trade just to make sure I got this right. So I'm going to load a risk graph. And this risk graph shows that we are collecting a credit of 215. Okay, so the credit collected is 215. Okay, but the expected profit is a bit less than that. Okay, so we are collecting a credit of 215. That's the credit that we would collect by doing this trade. But again, one more time, notice that the simulation here shows that the profit at target would be $180. Okay, so because we expect to reach before the expiration date. If you're not familiar with credit strategies, let me give you a little visual that hopefully helps you to understand. So this is the chart of Herbalife. Okay, this is where Herbalife is now. And of course, on the top, this green, drawing is the P&L, is the profit and loss of the trade. So, we expect Herbalife to go down. So what happens if Herbalife go up? Well, if Herbalife go up, your P&L goes red. You start losing money. Now, the most you can lose is 200, but if Herbalife goes up, you start losing money, right? Now, what if Herbalife goes down? Well, if Herbalife goes down, you start making money. Notice how your P&L becomes green, okay? But the beauty of a credit trade is that even if Herbalife stays fairly flat, okay, let's say Herbalife stays flat, it doesn't go anywhere, okay, all the way to the expiration date, because time is passing, and the time passing is decaying the value of the option, right? So notice how on the expiration date, right, you're going to be making, in this case, it shows us $45 of profit. Of course, if that stock was to drop, you're going to make more, $215, which is the credit collected. But even if the stock was to stay flat, you would still make some money. Okay, that's the beauty of this type of trade, where time decay is working in your favor. Okay, so nice one with Herbalife, where in this case, instead of a debit trade, the simulation suggested a credit trade. Again, this has a lot to do with the implied volatility of the options. Are options expensive or cheap? If they are cheap, you get little credit, it's not worth it. If they are expensive, you get a great credit, and then it's worth it, which is the case of Herbalife. So again, I'm going to move now to do our market analysis. But just for you to know, the two trades I have prepared for you today, one is a debit, one is a credit, one is to go long, one is to go short. And hopefully this was a great exercise for you to learn a bit more about option strategies and how to plan those options trades. Again, looking forward to get some feedback from you guys. Again, do not be shy. You are especially shy today, and I would really love to see a little bit of activity there in the chat box, even if you just to say me, Jose, all good. Well, you have no idea how appreciated that is, because at this moment in time, if you don't say that, then it's just me talking to my computer screen, which makes me feel that I'm a bit crazy. So give me some feedback, and that way I will feel a little less crazy, okay? Thank you for that. Anyway, so let's now move into the second and final part of the session, which is when we're going to do our special market analysis report for tiger traders. And this is where we get SMARTT. So this is market climate and cycles. We're going to look at call and put implied volatility. We're going to look at the option volume map, buy and sell UFOs. We're going to look at so many different things to understand the market condition. So again, let me do this real time with the trading platform. Again, in case you just arrived, I also want to go back to the last slide of the presentation, just so you get to see your QR code again one more time, and the coupon code to get AutoClimate for free. Okay, in case you have not done that yet, you can do it. Okay, so feel free to do it. And I am now going back to the real-time charts so we can do our market analysis. So what do we have? Well, on the left, I have the daily time frame of SPY, which is the S&P 500 ETF. So I'm looking at the S&P index in an ETF format. And in the middle, I got a 34-minute time frame of the S&P, okay, I know what's happening. Okay, so S&P futures. I cannot believe this. Yes. Okay, so whatever reason is not taking it. Okay, so S&P futures. Okay, sorry about that. Okay, so S&P futures. So this is the market I have here, and this is an intraday time frame, 34 minutes. So on the left, I'm looking at a little bit of larger picture, and then on the right, I'm going to be looking at more what to expect intraday. Okay, I'm going to talk about both. So first of all, let's look at the daily time frame. And what do we have here? So if I look at the climate, the first thing, we are dealing with an up climate. Okay, this is an up. Let me rephrase that. A down climate. Sorry for that. A terrible mistake. Down climate. Thank you for allowing me to say such a crazy thing. So the down climate is, we know it's a down climate because the dot is red, but important, we got a thick dot, which means it's confirmed. Notice that in prior cycles of down climates, we got thin dots, which means the climate was not strong, it was not confirmed. In this case, we got a bit more power to the downside, which I guess we can see it on the charts when we look at the speed of the movement to the downside. It's pretty powerful. Okay, so we can also see this with the AutoClimate, and in a way that is totally objective. You will understand the market condition without falling into the trap of trading psychology when you observe candles going up and down, isn't it? So this is a very easy to use tool that gives you very relevant insights. Okay, now talking about insights. Notice that we've been in this climate for 3 candles, but statistics suggest that 3 candles is a normal duration for a down climate. Normal duration means a 1 standard deviation, and that is 60+% of the cases. So in other words, we just reached what's normal on the way down. Could it extend a bit more like it did here? Yes. Is it likely? Every day that passes is less likely. Okay, so we should see sooner than later a turn to the upside and the market's going back up. And actually, the futures today, intraday, are showing 0.48% up. So what I just said seems to be happening already intraday. So when the market opens with a gap up, on top of that, we got a bullish candlestick. So all of those things may add up for a change of climate to show in 1 or 2 more days. We may see a blue dot instead of a red dot. Okay, now, am I confident? I would say pretty much. Why? Because take a look at the bottom part of the screen. What do we have here? So we have a blue line that shows the implied volatility for calls. Okay, and we have a gray line that shows the implied volatility for puts. Okay, implied volatility for calls, implied volatility for puts. So what's happening? The implied volatility for the calls, blue line, is above the gray. So the calls win. There are more people buying calls than buying puts. or there are more people selling puts than selling calls. And in both cases, okay, buying calls is bullish, and selling puts is bullish as well. So in other words, we have buyers in the market. Now, this is telling you we have buyers in the market. It's not telling you at what price. The UFOs tell you that. Okay, the UFOs tell you at what price the buyers are. This is telling you that we have evidence coming from the options markets that we got buyers in the market. Okay, so this is an options volume map. I'm not going to get into this, but when analyzing all this type of data, we come up with, we have buyers in the market. Okay, so if this climate changes and we have buyers in the market, so what happens is that now the likelihood for a continuation of the move is high. And what do we expect from a statistical point of view from a continuation of the move? Again, let's go back to autoclimate. Okay, so the next cycle would be 6 days on the way up. So when this changes to blue, and again, I showed you a screenshot a moment ago, and I'll do it again, so you can get your own autoclimate for TradingView, right, which is free. So the moment you get a blue dot, we are now expecting 6 candles on the way up in a daily time frame. What if we look at a weekly time frame? We look at a weekly time frame, okay, we are looking at probably a little bit more of a sideways market. Okay, notice how we got a climate here which has already lasted more than 6 weeks, and in that sense we even have one of those tiny gray lines pointing down, and that probably means, you know, that we are likely going to see a tiny change of climate. So we are going to see in a daily time frame this market go up, and then on the weekly time frame this market go down, and then up and down. So we should expect a little bit of that kind of behavior for 2 or 3 weeks. That would be my assumption based on the data I'm sharing with you and the interpretation of statistics. Okay, it's not like I have a crystal ball. And from there, probably a breakout to the upside and a very powerful continuation, at least 6 weeks at a time on the way up. So it's looking pretty good if you are a stock investor looking to go long. It's looking pretty good, but I would just say to make sure that you follow your trading plan, you take it easy, you manage your risk, and also you wait for a little bit more confirmation, because what I'm talking about is what I can see is likely, very likely going to happen, but it hasn't happened yet. We still don't see the blue dot. So you don't want to be the guy carrying the flag, you know, in the front line of the war, isn't it? You want to wait for a bit more confirmation, so your trading actions are a bit more on the safe side, or unless you are a very aggressive trader or investor, and then that's you, and I guess that's fine. But again, I'm just sharing how I do things for myself. So anyway, with all of this said, my friends, we have reached the end of our session. We have gone through a couple of trading opportunities, isn't it? We plan a trade on Amazon, on how to go long Amazon with a debit spread. We planned a trade on Herbalife, on how to go short Herbalife with a credit spread. We did our market analysis, which, you know, with a bit more patience, it looks like the market is setting up to be quite bullish, but we just need a little bit of patience to get that confirmed, and then maybe a couple of weeks of sideways until the market really starts taking off. But with all of this said, you know, unless you have a final question, which I don't see on the chat box, I think I'm going to call it a day. And I want to thank you all for joining me today. As always, it's always a pleasure for me to spend time on the Tiger Live room. And of course, I also have a special thank you for Tiger Brokers for organizing this, for putting me in front of you as well, as it's always lots of fun with me, for me, and always appreciate very much interacting with you, and also gives me the opportunity to showcase a bit of the things I do for myself, or what we do with our company, such as, you know, our training book or anything else that you will find on our website. So thank you so much for joining, and thank you so much, Tiger Brokers, and see you all around. Trade safe. See you soon. Take care. Bye-bye, everyone.